The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, this is Basil Chapman, and it is my pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock until noon Eastern Time. And today I followed 2 hours, 2 great hours. Good to have you back, Steve. You're sounding way better. Yes, I heard your comments on Google, and we'll go through that. A number of stocks, had a couple of emails, plus a couple of things in the den I'll be looking at. And basically what we're looking at is that there are a couple of chart patterns that I'm looking at. One of them is a pattern that I call, and let me just go to it right here. I call it's the oval pattern. It's like I call it the stork leg. It's basically you know how a stork stands on one leg. This thin little spindly leg goes up. Then there's this large body, and then there's the neck, and that neck is a thin neck, and then there's this long beak. This is exactly the pattern that I look at. I developed it years ago, back in the 1980s, when I used to hand chart, and I came across this pattern where it's more a psychological thing than an actual chart formation, although definitely it's a chart formation. But basically what happens is the market goes into a phase where a majority of reports that you hear on people talking about the market say that the market should be pulling back or should have a sharp decline or it's just about to make a major decline. And what happens is every single time there's a pullback, it's no more than 1 to 3 days, but invariably the pullback is intraday. It has a number of these little pullbacks, but by the end of the day it closes either unchanged, that's basically the day of rest is an unchanged day with almost a 0% change in the Dow. I use it based on the Dow. And the other is that it'll, if there is a pullback, a major pullback's like 1 to 3 days, and then pow, it breaks to a new recovery high. The only difference is this is a 120-minute chart, and this particular formation, what I am anticipating, 13,466 was the high of, that was at 4:15 on the 4th, at the close of the session, and the new high would have to be 13,467 and higher. Normally, it's not. This is not a case of 1 penny. It's normally a fairly decent move to the upside. I'd say it's about a good 40 to 50 or more points. Then what happens very often is it stalls. Well, today the high was 13,444. So we missed it by 2 points or 3 points, let's say, making the new recovery high. But something tells me that there's just enough effort, enough strength, the residual strength in this 120-minute chart for us to see a pop to about the 13,490s maybe just touch that 13,420 level that I've been talking about, as that's really the key to me. If the Dow can hold for 3 sessions, 2 out of 3 sessions above 13,420s, I would say that's really positive action. That really confirms for me that we're in this phase that I call the stork leg phase. But what would happen is it would make a top somewhere around that 13,400 area, and then come right back into the body of the of this formation here in the 120-minute Dow chart, and then it often goes below. It doesn't have to, but it could even go below. It could go below 13,322, and then everyone gets, really everyone, even the bulls get bearish and say, okay, this is a fantastic move, we've got to go down. And what happens then is a sudden move, and that move takes you right back to recovery highs. Sounds a little complex. What am I saying? There's a chance we go slightly higher, then come back down. For that would be the longer term picture of, in this 120-minute chart I'm talking about, of between 1 and 3 days. And then there's a sudden extension to the rally, and it goes higher. And as it breaks above the oval pattern, which would be 13,466, that's where you need a whole bunch of new information. But it's near-term bullish, shorter term bearish, and then little more than shorter term bullish. I wouldn't even call it intermediate term because I'm only talking about 120-minute chart. So that's the story there. Now, if we fail from here, the failure should say, okay, you're going back into this thing. And if you look at a number of charts, and we'll look at them in a few minutes, but let's look at my Dow Quartet. GE is stuck. It's at 21. That Roman candle from 3 days ago with the wick down to 20.68, I can just tell you this, that if GE, for whatever reasons, gets into 20.82, breaks under 20.82, it's going to retest the low of 20.68. That was the low of that candle, and probably retest 20.57, the 200-period exponential moving average. IBM is just kind of stuck. I think IBM, there's a real good chance that IBM has made a hat-trick top for now, at least for now, meaning that it could go back and retest the low towards the low of 181. It's at 191 right now, and it's just stuck in a trading range. Maybe makes another U formation. It's just, I don't see it as a trade right now. It's just kind of stuck. I don't even, actually, right this moment, I don't even see it as a short or a long. I just see it as probably pulling back a little bit, but I don't really have anything too much. But Triple M something else. Look at that extension. It's gone to a new recovery high. Is this new leg C or is it new leg E? Well, the stochastics at 75% in the weekly, but 94% and stuck in the daily. That is really powerful. It means that even if there was a pullback, the 9-period exponential moving average of 95.15 between there and the gap up of 93.96, that'll be a containment area for Triple M. As I see it right now, the monthly is in new leg E. It's below the 98.19 high, all-time high, but still acting very strong in the monthly chart. And then the last one is UTX, and UTX acting really nicely here. I don't know whether this is, let me just type that in. I didn't have a chance to put it in. I don't know whether it's E/A to brand new F/B, and everything about it says it's probably the new leg B at this particular time, unless it breaks down and goes underneath 83.1, the gap low of the second, also had a round number 84 high. So 84 will be the number to look at. Close below 84, then the 83, 84 level of the 9-period exponential moving average in the daily will become a resistance point. So far, it's acting pretty darn well. And let me just quickly go to, actually, let me go through the numbers. I'll do the numbers actually with the charts because I think it'll be better that way. The Dow has had not a very pretty looking candle. It just missed by, why do I keep forgetting to type that in? 13,447.10. Let me just write that in here. 13,347 point, I think I said 16 or 18. So it missed it today by 450, by just under 3 points. So that's important because it needs to break above it. The E-minis, ESH 13, did go to leg B. I do have to call this E. It could be F/B, but right now I'm going to call it B because the stochastic and the MACD are just so strong. And the 120-minute, okay, remember that rectangle that I said can last a lot longer than your patience? It broke just above the 1463 previous high. It went to a peak. It went from a buy mode in the 120-minute chart to one of the smallest peak A, B, C, Ds that I've seen in a long time in the E-minis, and it went from 1446 to today's high of 1465, round number low, round number high, and now it's pulling back in the rectangle. It's amazing how long these things can last. Hey, look at this, NQH13. Didn't that do the same thing? Went to a peak E, and now it's pulling back very sharply. I probably will have to put a down arrow here, and it says that within this framework of the rectangle, I mean, how do charts know to do that? To stay in a trading range for a week and a half? This is amazing. All right, let's get back to our story. Get rid of that short-term one. Okay, now we've got the Dow. The Dow support at this particular point, NDU, the Dow support has to be 13,328, which is the 9-period exponential moving average. I suspect will it get there? There's a good chance it's going to get close to that, but this is now probably forming a rectangle formation, but even better. Actually, you know what I think it's doing? You see this? This is the oval pattern. And what you need in the oval pattern is you need a little time. I don't want it just to be 4 or 5 bars. I like it to be about 7 to 9 bars. So we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, maybe even 10 bars. So we're in this oval formation. This will be the leg right here, L-E-G, of the stalk. This will be the body, B-O-D-Y. And then the neck will come if there's a breakout above, N-E-C, okay, above 13,477.18. Let me just double that at 18. 13,004. Whoa, wrong one. 13,000, 0.10. All right, that's not an 18, that's a 10. 13,477.11 starts the neck. All right, so that's the story there. The S&P SPX.X, and I'm going to get to Google. There was a question about Google. See, I don't think this is G/C. G/B. I think this is leg B in the S&P as well. So once again, we've got leg, body. We'll watch this formation. Hey, it's just a formation. Does it have to do it? Of course not. Is it going to listen to me? Oh, absolutely not. It does what it has to do. But this is the pattern that I'm saying is very important. And my suspicion is that it mustn't break under 1451.64, the S&P, the low of the 8th. So 1452.90 will have to be the support that it holds. All right. The weekly chart, I've got this as leg B rather than leg E. I have to be conservative. I just have to put in what I need to put in. There's nothing wrong at this particular point, but I need to put in, could be a continuation of the previous high of peak D. This could be leg E, going to a peak E if there's no new high this week. That's interesting. 146794, 1469. Oh no, this is it. This is E/B. So with my preference, I've got E first. My preference actually is to be thinking of it as a B, but we'll see. Now you've got the Qs, 1, 2, 3. The QQQQ Trust Series. Didn't make a new high today. Pulled back. It's at 66.59. Made a high of 67.27. The last high that was important was 67.34. Just missed it by 8 cents, making a new recovery high. But the MACD is really strong. Stochastic still good, but it is at 80%, and the unbalanced volume is not particularly good. Let's look at Apple at the same time. Apple is pulling back after making a pop to the upside of 528.72. Now it's at 516. This is not. Now I've got a lot of charts that I'm looking at. In fact, we are short another stock today that we shorted at the opening. It's down about 3 points from where we shorted it at. A stock we tried to short yesterday, which we missed just by about 50 cents. This is a stock that's up in the it was at 146 or so. We just missed it. Has pulled back. It has pulled back about 4 to 5 points. I happen to choose this particular stock that we've got right now. Why? Because it is showing all the signs of a retracement rally failure mode. And that to me is important. That's part of the process that I look at. So in looking at so that we've got that Apple's pulling back, I just want to do the VIX quickly, and then we'll come back with the other indices and any of your calls at 877-927-6648. I love to take your calls, and we're going to look at gold. We're going to look at all sorts of things. I'll be back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. I got him bending down here to see this chart. Okay, got it all. Here we are. We're back. Dow's down 0.55. S&P's up $1.28. It was quite a bit higher much earlier. Now let's just talk about a couple of things. I was looking at the volatility index, and the VIX index, as far as I'm concerned, whoops, I typed it into the chart by mistake. If you're looking at Tiger 1, this chart in the middle here is the 120-minute chart. I'll get rid of it in a minute. The volatility index has plummeted in an Eiffel Tower pattern. Look at the 120-minute chart from 23.23 at 4:15 on the 28th of December down to the low of 13.22 yesterday. Today's low is 13.33, and there's every chance that there's a little bounce here. I'm not sure. I would not consider it as part of my vernacular looking at the market right now. Because it's oversold, it needs a little bit of a bounce, and that might correspond to some weakness. I would prefer to use the volatility index in different ways. If it gets back into the 15 area, that's going to be saying, okay, now the market can be having that 1 to 3 day pullback. Meantime, let's just go on. We were looking. I want you to do the IWM because it's really important. We've all been looking at the IWM. This is a leg E/B. There's a gap up. Now, gaps Normally, I say there is absolutely no rule about when gaps need to be filled. There is an absolute rule that in a major low, do you know that we have still got gaps, major gaps from the low of 2009, that March the 6th and March the 9th, those lows. So, to say gaps get filled, eventually, hey, I'm sure one day they'll be filled. But gaps that are close to where the price is now on the upside, very often, just like a doji candle, just like any other medium that you use within your context of technical tools, a gap is just another technical tool that says, if there is weakness, where would the weakness go? Well, obviously, the candle that we'll be looking at in the IWM, which is the Russell iShares ETF, that is 87.81 was the high on the 8th of January. So we're 87. We're at 87.06 right now, having made a low of 86.95. So we're starting to get into the body of that particular candle. But the candle has a low of 86.39, and 86.28 is the 9-period exponential moving average. So absolutely, I could draw this in right here and say, at some point, and it might be fairly soon, I'm not sure, there will be a touch of that particular level. If it starts to break under it and goes into the 85.63 area, then it's going to say, okay, that's your 1 to 3, it could be 3 to 5 day consolidation. I'm not sure yet. Meantime, I'm calling it, that's where a small consolidation could take place. But the stochastic at 91.82% and the MACD this strong, it says, hey, just if you're going to short, you're going to do it like an intraday short, a very, very short-term short. I'm not looking at it that way. Now, let's do this. And the IWM weekly chart broke out in the falling axe pattern, and that's really important. I don't have time. Right now, I'm going to go through a couple of things, technical things in the ChapmanWave that I just need to review. People have asked about it. I'll try to get to it very soon. Let's just go on. Gold, the GLD, right now, the GLD is at 162.33, up $1.85. It stopped dead right at the 200-period exponential moving average. The GCG13. I'm going to leave this to Larry. Larry's the expert on these commodities, and I'm just going to say that right now I just think this is a retracement failure because the weekly chart is really still at this particular point, even though there's a V-shaped turnaround in the on-balance volume in the weekly chart. I believe that we're in a down mode, and that down mode won't stop for quite some time. I'm not giving you a price right now. I'm saying quite some time. But more importantly, when I'm looking at this, I had a question, an email question. One of my questioners that I often get overnight is, actually it wasn't a question. It was more a statement that this person had who had done my Master's Trader Series, and we were looking at the SLW at the time. And I said, no, I think it's still weak. But it went down. The SLW is silver wheaten. It's trading at 36.29, up $1.01. So it made a low of 34.03, and it's bounced. It's gone to leg, this is leg B. Once again, it's gone to a leg B, and it's pulled back quite sharply, but the B is still active. So that says, can this get to leg C above the high of 37.58 made in the second of leg B, peak B? And I'm going to say, I think it's possible, but I don't think it's going to happen. I think it's going to reverse. I've got the another arch formation. I'm going to draw this one in. There it is. I'm drawing it like that. And I'd say the 36.80 to 37 area could be very strong resistance. Now, it's touching the 9-period exponential moving average in the weekly chart. We've got another day to go to close that. If it does close in the upside-down Roman candle, if it does close at 36.54, then it could, 36.34, then it could touch the 37.58.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, folks, we're back. Okay, so let's continue with the analysis. In the GCG, the March, I believe, the March contract of gold, the resistance is 1684. If we can break and close above that, then absolutely it could make it could try to get into the previous high of 1695.40. I still think this is a counter trend, a rally. I'm not going to fight. I'm not actually trading it, so that's the way it is. Now, this is really important as far as I'm concerned. If you're looking at different charts, when I talk about a hat-trick top, I've been looking at Google and saying, and I know Steve asked the question about the analysis of Google, at least my analysis of Google. Today it made a round number high at 745.00. That's a round number. And it made a round number at the same time as the 120-minute chart, was making this cup formation. What is the cup formation? Well, now let me just take a moment. Maybe I'll just finish it all. Bonds, the TLT is down at down 40 cents at 118.72. Just needed to cover that so we can get all our little bunnies in order there. So what we're looking at in the Google 120-minute chart is that there have been a series of buy signals from the low at 636 round number low, and it made a 647 high. So that's really important to me. So I'm going to type 636 in right here, 636, and the date is somewhere around the 15th, 16th of November. It goes peak A, B, C. D just touches the 200-period exponential moving average. And normally what happens when you've been far away from this particular moving average, what happens is that as you get to it, it's a magnet. Then you either deflect from below on it or below it, or you inflect and you go above it. But normally what happens is you just go above it for a short while saying, woohoo, where's that cartoon that I drew? It's in my CD introducing the ChapmanWave methodology, when the husband and wife, they're climbing the mountain, they get to the top, and he says, the wife says, "Oh, that's great. You must have a great view from here." And all he says is, "Yeah, deja vu," because it's about to go down. And that's what happens when it starts. It gets to a peak G. It gets to a peak G at on the 3rd of December at 705.89. Pulls back to the line. Then it hugs the line. Just find me another instrument that does things as well as this 200-period moving average. And it's the exponential moving average. It dips below, starts a brand new buy mode because the stochastic does exactly what it's supposed to do. The MACD follows, and it goes from a trough of, on the 7th at 3:30 in the afternoon, at 682.42. It starts to climb, peak A, peak B, peak C, holding the blue line, that 9-period exponential moving average, and then it goes to a doji peak D on the 18th of December, 729.10. Sounds like a horse race. And then what happens? It starts pulling back, and then it turns the 9-period exponential moving average into a resistance. It walks it on the way up. It's a gondola on the way down, as when you go skiing, and now you've got the gondola coming down. In fact, that's resistance goes trough A, trough B. Call them troughs on the way down. Trough C, trough D, trough E. Oh, it's just so close to the 200-period moving average. And then what happens? It touches the moving average at on the 31st of December at 11:30 in the morning at 696.00. Oh, another round number. Isn't that amazing? 696. I mean, how does technical analysis get so exciting, huh? So, green. Right there. So it goes. Starts to turn around, and what does it do? Look at the fast-moving average there. Learn these techniques, folks. My CD introducing the ChapmanWave methodology, it goes through these things so carefully. Let me just quickly go back and explain for those of you, maybe you knew, maybe it's the first time you're hearing this. An up leg starts the moment it crosses by 1 penny the previous high peak. So in this case, that peak A, the moment it goes 1 penny above it, starts what's called leg B. Leg B is a floating letter, B. And that B, until it makes a lower high bar, the whole bar top must be lower than the previous one. That's parallel. Then it goes again and it's parallel. All of these are B's until it makes a lower high bar. That becomes a peak B. Then the moment peak B by 1 penny is pierced, it becomes leg C until it's a peak C. So it's the same thing on the way down. On the way down, the troughs, each time you take out by 1 penny on the downside, it either continues the leg down, floating letter, or it becomes a trough if there's a higher low bar. Good. Okay, now we've got that out the way. So what happens? It goes peak A, peak B, peak C, peak D, and there's a trend line that you can draw, and it was resistance. It's also a rising wedge formation. These techniques are all explained in my introducing the ChapmanWave methodology. Now look what happens. It makes a double top formation. It goes to 741.47 on the 4th, 741.47, and then it pulls back, makes a cup formation. It actually makes a left side, right side price time match. I don't have time to go through that. And then what does it do? This is all the 120-minute chart. Today it pops above 741.47. It goes to 745, round number high. The MACD and the stochastic are very poor, but until the 9-period exponential moving average becomes a resistance level, you have to say, high-level consolidation, the rule of the ChapmanWave drop bucket formation. In my CD introducing the ChapmanWave methodology, there's something that I call the drop bucket. It is, I think, chapter 22. Let's go to that. Chapter 22, there it is, the drop bucket. What is a drop bucket? It's just a double top formation. It looks like there. It looks like that. Hey, patterns repeat over and over. This is from Caterpillar back in February of 2002. It doesn't matter what the date is. Does Google care that this is the same pattern as then? Now, the rule for this particular methodology is if it drops between 1/3 and a half between the lip of the left side high and the cup, the low of 724, so 24, let's call it 20, so that's 18. So, yeah, it's right there. It says that if it starts to close underneath, it should retest the low of 724.25. And if it breaks that, there could be a 1-to-1 decline, and that would take it down to 705. But wait a minute. We've got to go back and say, what's the greater tide doing? Well, the tide in the daily, which is the next larger time frame, says that the stochastic at 86 is still very positive. There was a failure between the on-balance volume, that's the blue line there, and right there. Let me just do a vertical line right here to show you. Right there. Look at that vertical line. The technicals, the on-balance volume is lower than it was at the previous high peak E of that 471.47 level, peak E/A that is. The MACD, though, is still very strong. The histogram is still expanding, or just beginning to contract here. So I like what I'm seeing here. If there is a pullback, yeah, it could go down to the 728.60 level, the 9-period exponential moving average. The day is young. We have to see where this is going to close. And at this particular point, I'm going to say that the larger trend of the daily dictates more of the importance than the 120-minute chart. But certainly, if today's low of 733.50 is taken out, woof, all of a sudden, you've got a lot of power to the downside in the 120-minute chart. But the big question, I think, is this a serious top unfolding right now in Google to make a peak E major top in the monthly? Well, we have to go to the middle one, which is the weekly chart, which is the middle one, and if you're looking at Tiger TV. It made a peak F/B top at 774.38 the week of the 5th of October. It's come down with the technicals and the stochastic, and had a very nice rebound, and there's a potential for a doji candle forming right here. If by Tuesday at between 3 o'clock and 4 o'clock on Tuesday afternoon, Google is below 727, I will then have to say, that could be a right shoulder failure. What is a right shoulder failure? Well, in my CD, introducing the ChapmanWave methodology, Chapter 21 has the right shoulder failure, and it explains in great detail what that is. It's a failure that takes the price from a certain peak of importance and a pullback and a retracement to the upside, where the stochastic and the MACD are failing. If there is a failure at a peak A or B on the right side of that particular pattern, sometimes there's no left shoulder, I call it right shoulder because it's on the right, that H pattern becomes very important. What is the H pattern, you ask? Well, we don't know yet, but in the weekly chart, if the stochastic, which is at 58% by a week from Friday, is down at 53%, somewhere around there, and there's been a failure, and Google is down at that 718 to 710 area, I'd have to say, whoa, that could very well become a right shoulder failure. but the MACD has to start turning down, and the stochastic really has to make a reversal with the green line underneath the red line, and then you've got yourself a right shoulder failure. And that says, be careful, this thing can come all the way back to the 650 to 640 area. Whoa, wait a minute, we've got the monthly chart to do. And the monthly chart says, hey, I don't know what you're worrying about. I'm still looking great. I'm walking the 9-period exponential moving average with 683 as major support. I'm right in between the major top of 774, 36, 38, 774. Let me type that in. 774 point, I'm going to call it 38. I think it was 38 or 36. And so far, there's nothing wrong. MACD is good. But the stochastic is saying, just be a little careful because I'm not confirming the rally yet. I haven't gone back to 80%. I'm at 75%. And I haven't yet crossed, the green line has not crossed the red line. Slow moving average needs to be crossed by the fast-moving average to confirm that it can go not just higher, but above that. But look at the left side, right side price time match. In fact, it's exceeded that level. So we're going to watch this closely. I don't yet have any signal to say that Google is making a hat-trick top. I said there's a possibility of it. I just don't know yet. I need to see how the Friday closes, and I need to see it by next Tuesday or Wednesday to see if it's gone to a new recovery high. The moment it goes 1 penny above 745.0000, that just breaks out and it says, forget it. That 745 level is gone. You're now looking at higher prices. So that's my analysis. What would I do? Go long, go short? At this particular point, I wouldn't do a thing. If I was long, I'd say, you know what, on a very small position, I'd have a stop at about 726. Otherwise, I want to hold this. Okay, so we've got that out the way. 877-927-6648. Now, let me just see if there are any questions no. Okay, so then if there are no questions, let's look at this copper. Copper's holding the 9-period exponential moving average. It's really important in my work that copper, certainly holding here is good. But if the FXI, which is China, and it's supposed to be coming on strong again, if the FXI, the iShares of the FTSE China 25, it used to be the Shenhua, I think it was ETF, now it's called the China 25. If China really is starting to buy copper again, because they're building, that's going to be important. We need to see copper going higher. Right now, there's a beautiful left side, right side price. Look at this. The high in the FXI weekly chart, 41.31, it's at right now, up 31 cents. But the high of 41.74, the week of the 2nd of March, that was peak E in the ChapmanWave. Look at this, just over and over. How many times do you see these Ds and Es? Well, what happened was it made a cup formation. It went to trough F on the way down. Look at the 9-period exponential differential in the MACD. Beautiful. In fact, the histogram is still expanding. Look at the stochastic at 94%. This is a weekly chart. This is really impressive. You made the cup formation and you broke out and closed last week above that the 40.74 high of the week of the 2nd of March. That is very important because it's a dreaded H upside down, or the arch formation upside down, a cup formation breakout. So I'm looking at this and I'm saying, okay, to the left side, where's the next most important level to watch? Well, for me, it's this whole area right here. And I will draw what I would consider to be, let's say, right to that candle. And now I'm going to draw the same thing. This is now, I really don't want to make it, I'll do it just for now. Too many colors. I'm going to make it there and make it green. And that says, where's it going to be? Right there. It says, by about the week of the 1st of February, the 42.74 to 43.41 area should be tackled. How it handles that, where that big ugly candle started down on the 5th week of the 5th of August from 42.74 to 37.54, that's going to be very important. So if copper is going to work because of China, we should be seeing something very similar. So if we look at the copper chart, I haven't looked at it. Is that JGC? I believe I am right. The copper chart. See, the copper chart's just kind of stuck in a trading range. I'll be back. Basil Chapman, 877. We'll be back with Ari from Arcadia straight after this. Haven't heard from Ari for a while. We'll be looking at the GLD.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. The Dow is up 12. S&P's up 260. This is what I mean by that stork-leg formation. Somehow there's a rotation through the markets. There are different sectors so that stocks that were doing really well, they pull back, and if you keep your focus on them, you say, oh, this is it, the market's all over. And then other stocks just take their place and move higher. It's just, if it happens, it's a remarkable thing. This is the opposite of whack-a-mole. This is Papa-mole or something. I don't know what it is. But we're going to go straight to Ari in Arcadia. Hi, Ari. How are you?
Happy New Year, Basil.
And a Happy New Year to you. Long time no hear. Hope you're doing well.
I am doing well.
Good.
I had a discussion you had a little bit about gold, and you know I trade GLD.
I know you've traded a lot, and you traded very successfully, yes.
On a 5-year chart, weekly,
yes,
I have a diagonal that runs off the bottoms. And we now...
I'm sorry, which time frame?
5-year weekly.
5-year weekly. Let's go straight to the 5-year. Yes, okay.
I have a diagonal that we're under now. And my analysis says that we'll be under it for 4 to 9 weeks. And then it says basically that we put the bottom in 4 to 9 weeks.
You know, so you're looking at the GLD. So you're not giving a price, but what you're saying is that there is a resistance trend line that is pointing down, and that because we have not broken above it, that is pointing to lower prices. The lower prices, if extended in terms of time between 4 to 6 weeks, will significantly drop the GLD because it will keep bumping into a line that is making lower lows on each successively move to the right. So if that was to be the case and we were to extrapolate what you're saying, it would say that there's a real good chance that the GLD at 162, and on my weekly chart I've got it under the 9-period exponential moving average. The MACD is not very good. The stochastic is trying to have a bounce at 14.97. And I've got to watch it closely because every other turnaround from under 20% has been a pretty successful one, not so much in the number of points to the upside, but it has extended out for 4 to 6 weeks in time to the upside. My suspicion is, and I'm with you, that the monthly chart is the one that's making the pattern that I call the H that goes to an M formation. If that is the case, I'm going to make it real simple because the two cup formations that are formed with lower, and let me just double check, I believe it's a lower high, just missed it, 174.07, okay, it's the same. So 185.85 was the high back in September, the week of September the 9th, 2011. So we're talking about a 2-year, it's almost a 2.5-year, two and a little bit, 2.25 year consolidation, a sideways consolidation. I'm going to make it real simple. Let me show you something. If anybody's looking at the Tiger TV right now, look at this ESH13. This is after the spectacular run-up back on the going into the high of the 2nd of January from the low to the high, the the March E-mini went into a rectangle formation basically between, it went a little higher to 1460, then 1463, and then 1446 has been the low. But it's been in the rectangle formation for what's today, the 9th? So for about a week. It's actually a little over a week in trading days. So if you extrapolate that as a 120-minute chart, and now I'm going to go back to the GLD, and I'm looking at the weekly chart, I'm going to make this even bigger. I'm going to say that the rectangle formation says that we've been to the top, and that we're probably going to come back down to the bottom, and if the bottom is taken out, we will touch 138.08. Well, we do something different by that time, but 138 will be the 200-period exponential moving average in the weekly chart. So I hope that kind of corresponds with what you're looking at.
It does.
Okay, thanks so much for calling, Ari. I appreciate it. Folks, stay tuned for Larry Pesavera. Hey, if anybody's going to talk commodities, he's the man. Stay tuned for Larry and all the other shows today. I'll be back tomorrow. Thanks for being here. My service is the opening call.